Bloodbath started in stock market, Dalal Street. So mostly you would have been hearing these news in the last couple of weeks, and in the December month alone, market has corrected close to 10% from 18,593 points. Nifty has corrected up to 16,593 points. It would have been much higher today, but it recovered, I can say. So all about that today in Bloodbath and Dalal Street. Hi, hello, this is Ganesh Santuru, a stock market profit coach and author of the book One Page Stock Market Plan. All about stock market in this video, why it is correcting all these things. Okay, so market is correcting by close to 10%. Is it really a bearish condition? What is bearish market? Whenever the market is correcting by close to 20%, then it is considered as market is entering bearish zone. So you should be really careful. And for the last 1 month or so, market has corrected by close to 10%. And this is almost like in the last 1 week, it has been so much like correcting, volatile. Nobody was not knowing what to do. And now it's clear like it's correcting close to 10%. So is it a tricky situation? Yes. Is it a volatile? Very much. And we don't know what is going to happen. And we have a couple of more trading days in December month. And before expiry is going to come. And again, the holiday season is going to end only by the end of December. And there can be much more sell off because market is uh, considering so many things in the last 2 months. And the first thing what we are going to speak about is Omicron threat. And because Omicron has been like we thought it won't be uh, as much severe as COVID. But the point is, it is spreading so fast compared to COVID itself. So the severity is less, but the spreading nature is very very high. And so for that case, already Netherlands has said that everyone should stay in. The lockdown has been imposed, and so many countries had imposed restrictions on the travel and so much stuff. So considering all these points, it is becoming a global threat once again. And last year, the same time, Corona has been second wave has been going in a full swing. Now Omicron and the cases are started rising. Right. So this is something a serious condition. People all over the world market is considering. And the second most important point is FII sell-off. The foreign institutional investors or the people last in the last couple of decades, we can say that easily say when FII is putting money, market is going to go up. When FIIs are taking money, market will fall like anything. But in the last couple of weeks, whenever FIIs are selling, Indian investors, the domestic institutional investors or retail investors are pumping in the money. It means they are taken out 47,000 crores in the last 1 year, and the Indian investors are equally invested. Domestic institutional investors are nothing but mutual fund companies where you see close to 8 to 10,000 crores of money SIP flow is coming in into equities, and also the ULIP policies, investments, and also the EPF. All these NPS, all these money are coming into stock market regularly over a period of time, month on month. And new NFOs are being people are investing like anything in mutual fund, and also the stock market IPOs, people are subscribing to it like anything. So all these points are saying that still Indian investors are safeguarding, but the FIIs are selling and going out. Where they are going, generally they will be selling when they feel that valuations are very high. Let's go and find out some other country. And China has been sold off like anything, and equally Brazil. So the FII interest has gone towards Brazil and China, whereas in India the retail investors are investing in a much bigger manner, either mutual fund or stock market. So the sell-off has been offset. So even today, if you look at market has went down to 1,600 points, but it recovered to loss has been trimmed down to 2%. So from 3% losses, market has been trimmed down to 2% purely because domestic investors had pumped in so much money. So is this a threat or something? You don't need to worry because these are short term points which will happen. And if you need money in the next 3 to 6 months, be careful because we don't know what can happen. But if you are a long term investors and if you want to pump in your money, don't invest all your money. Say you want to invest 1 lakh, invest 20 to 30,000 right now. Remaining money invest whenever the market is correcting or looking at the situation, and be stock specific. Don't invest just like that. Still the valuations of many big companies are still high, but if you want to invest in good quality large caps or good quality mid caps, do the valuations, then only you should enter. Just by looking at the stocks and seeing that yes, it is at good levels, if you enter, you might get locked up. And there are many penny stocks. People are finding it, I can't buy a stock worth 2000 rupees, but let me buy a stock 1000 stocks for 2000 rupees, because the penny stock worth itself will be 2 rupees or 3 rupees. And I think so many people, they want to buy in huge quantity. It's not about quantity, it's all about quality and at what valuations you are buying. So if you don't know about the valuations, please learn it and invest, because that matters a lot right now. Because if you there are instances like Tata Steel where the in 2008 people bought at 800 rupees, and only in 2020 rally it crossed 800 rupees. And the same the case with L&T. But you should know when you should enter, when you should exit, and only when the valuations are cheap you should buy. And there are stocks which had run up like anything, like Tata Power, so many companies which are very high valuations. Is it okay to enter those stocks right now, or is it okay to wait? All these points matters a lot. It's not just like market has corrected, go and invest. Don't do that mistake. Market has just corrected a small level. It needs a lot of it will take lots of time to recover, and there are conditions which needs to get stabilized. What are they? First, FII need to come back, and the second most important thing is Omicron threat needs to come down, and also the unemployment, the GDP growth in US and in India, everything needs to grow. And also the earnings problem which was there in Indian market, it needs to recover. The consumer confidence index, everything. There are so many factors which needs to recover from now. So don't just jump in and invest all your money just because there is a dip, because it's called as catching the falling knife. Just think of it's falling like anything, and if you're going and catching, you will lose. The point is you won't lose your money. You will lock your money at some level, and only when the market recovers you will be able to make more money. Until then, it may be a year, 2, or even 5 years or so. So the point is, hold on to your investments if you're already invested. Only if it's a good stock, check out the valuations and then stay invested. Hope this video will may be helpful for you if you are planning to invest or if you're already invested. And if you have any questions with respect to how far it can go down and any other stuff, please do post your questions, and please share this video with one of your friend who has already invested in stock market, who doesn't know what to do in stock market right now. Thank you so much for watching. Please check the description for my book links and other stuff. Thank you.